And what's up, you guys? Welcome to the Mega Grove. My name is Krisha, and without further ado, let's jump into today's Bitcoin analysis. Now, this is going to be something different than what Sean put out yesterday. Sean did do a rather intermediate analysis of Bitcoin. He found bearish signatures on the 12-hour time frame, and I urge you guys to actually go ahead and check out that video because he also went ahead to cover the FOMC meeting that takes place next month. And that's going to be a very, very important one, guys, because you need to understand that right now the market is in such a position, such an emotional position, that they are hanging on to every word that comes out of Jay Powell's mouth. So Sean essentially covers what to expect from the market depending on what comes out of Jay Powell's mouth, okay? So go ahead and give that video a watch if you want an edge getting into the next FOMC meeting. Also, there's a lot to learn from there, so, why the hell not? And also, guys, I urge you guys to go ahead and smash that like button if you haven't already done so, because it goes a long way for the channel. If you want to wait till the end to smash that like button, then by all means, wait till the end to see if you derive any value from here. Now, as far as today's analysis goes, I wanted to do this one primarily because I'm actually noticing a signature on Bitcoin's chart that could be alluding to the smart money actually positioning in this general area of the market. Okay, so that's what I really want to talk to you guys about today. Now, I do believe that you could miss the smart money signatures if you fall victim to the groupthink phenomenon. For those of you who do not know what the groupthink phenomenon is, the groupthink phenomenon was actually brought about by this social psychologist called Solomon Asch. Now, Solomon Asch actually presented one subject. He took a group of them, of course, brought them in individually, and he presented them with 3 lines, okay? This is a very nasty line, but just for the sake of this demonstration, he presented them with 3 lines. Let's label them A, B, and C. And then he gave them a line X, okay? Now, he asked each subject that which line from A, B, and C best represents line X. Now, it's pretty clear that, hey, you know what, B would be the right answer, or something very, very obvious. And most participants, 99% of the participants, actually got it right when they were brought in individually. However, what Solomon then went and did was that he hired a bunch of actors. Okay, he hired a bunch of actors, and he put them in the room with this one subject. Okay, so say you are the subject. He hired a bunch of actors, and he's like, all right, guys, you're going to sit in the room with this one guy, all right? And now all of you are collectively going to pick the wrong answer, right? You guys are going to pick C. Now, given the circumstances, when surrounded by all of these actors in the same room picking the wrong answer, the actual subject also picked the wrong answer in most instances. So this subject here then fell victim to the groupthink phenomenon. Against their best judgment, they picked the wrong answer when faced with social pressure. Now, for those of you thinking that, Christian, no way would I fall victim to the groupthink phenomenon amongst a bunch of random freaking strangers. I'm better than that. But what if I told you that instead of random strangers, the people in that room were actually a bunch of authority figures? What would you do then? Would you fall under pressure? Most people would, and in fact, Solomon actually conducted this experiment with a bunch of authority figures, and turns out more participants caved to the wrong answer. Okay, that is the groupthink phenomenon, and I wanted to bring that up to your attention today because I'm noticing that market participants right now are feeling this fear, primarily driven by crypto Twitter, primarily driven by these authority figures out there putting out all of this news. There's a lot of noise right now because of the FTX event. In fact, the news reporting in some instances has also been very, very lazy. A lot of companies, a lot of VC companies have been under immense scrutiny because of the whole FTX debacle. Everyone is under massive suspicion right now. Everyone's balance sheets are being questioned, right? Everyone's solvency is being questioned. Now, recently, a company that came under fire was Jump Capital. However, to debunk all of the FUD around Jump Capital, the crypto division at Jump Capital actually came out saying that, hey, given the rumors flying around, we want to debunk a few things. Jump Crypto is not shutting down. We believe we're one of the most well-capitalized and liquid firms in crypto. We're still actively investing and trading. So if you're looking for funding, please get in touch. Now, that was a very, very strong statement by them. But I wanted to present Jump Capital as the example of here to show you that there is going to be very lazy news reporting on Twitter, and people are going to fall victim to it. It's going to breed a lot more fear in the market than usual. Alrighty, so it's about really assessing your emotions and your biases in this particular juncture of the market and asking yourself, are you falling victim to the groupthink phenomenon? Because that is going to prevent you from understanding what the smart money is doing right now. Okay, now I have reason to believe that the smart money might be positioning in this general area of the market. So I'll tell you what it is that I'm looking at. Now, we know that Bitcoin's major trend is a bearish trend. We have been in a bearish trend since November of 2021. I mean, it doesn't take a genius to notice that on the chart. You just have to zoom out to your weekly or monthly. You know that we're currently in a downtrend. Very, very rarely does a major downtrend reverse in a fortnight. The only instance where that happened was back here during COVID. Right? That was the only instance where it actually happened. Now, you need to understand that we also had an outlier event during the COVID event, and that outlier event was some massive, very aggressive monetary policy that led to a very rapid bullish turn for the markets in general, not just Bitcoin. Now, you need to understand that macro trends, to reverse, it usually requires a considerable amount of time. It takes place over a considerable amount of time with prior warning. So it doesn't just reverse without any sort of warning. Those warnings are given to you with a shift in momentum in addition to increased volume. Increased volume, by the way, which we're seeing right now. Alrighty. So it's not just increased volume that we're looking at, but it's increased volume in addition to price just ranging. So that squeeze in volatility does not warrant the volume that we're seeing on the chart. And you usually find that this takes place on very, very important market reversals. All right, if you go back in time, there are very rare instances where you see price action like this. The last instance where we saw a massive push in volume with price just consolidating in a very, very tight range was back here. Okay, this was the bear market of 2018. I want you to notice the hike in volume. I'm just going to take this, put it down here. Okay, notice the hike in volume in contrast to everything that came before that. Now, once again, we saw it on the reversal right here. This was the 14K top where we saw a massive push in volume, but price action did not reflect that push in volume. Okay, usually on instances like that, the market is either signaling distribution or accumulation. So it's very, very important that you pay attention to these phases in the market. Now, I think it's worth mentioning that I usually like playing the volume profile during bear market turns because you need to understand that market participation dries out immensely during bear markets compared to bull markets. Okay, that euphoria brings in a lot more retailers during bull markets. And when all of that euphoria dies down, they exit the market. Okay, so what's left, the market participants left during the bear market phases is a lot less. And that's why the volume means that much more pouring into these little bear market reversals. All right, so I know that some of you guys are probably wondering, well, can you even trust the volume that's coming out of these exchanges? So what I've done for you guys is that I've actually gone ahead and found a website wherein they actually filter out volume based on the liquidity health. Now, this has more to do with the spreads in these exchanges. Okay, so now we have the liquidity health. Now, the green are the good exchanges to be looking at, and the yellow moderate, and then so on and so forth. But anyways, the good ones are Kraken, Bitfinex, Coinbase Pro, Binance, and Bitstamp. Now, Binance actually caught my eye because they actually have the most traded volume of Bitcoin on that exchange. So what I did was I went back on over to my charts. Let me go ahead and bring up the Binance exchange because I want to check this out. I found something really, really cool. Binance exchange, check out the freaking volume that poured in here, guys. Okay, this was the range. This was that 20% consolidation range, and check out the volume on this range compared to everything else that came before it. We're clearly seeing a shift in momentum here leading into that FTX event, but this caught me off guard when I saw this volume profile on the Binance exchange. And that's why I'm saying that it's going to be very important to have those contingencies in place just in case price does not get down to 13K. I understand that many of us are looking for 13K. I'd be lying if I told you that I did not have a bid at 13K. But that 13K right now is also being driven by the fear in the market because of the groupthink phenomenon. There's a lot of fear, there's a lot of negative news, everyone's falling victim to all of this, and everyone is expecting lower prices. Okay, which is fine, We might still get down there. Okay, but it's about having that contingency. Now, after looking at this, I'm like, you know what? It's time that I start preparing for my contingency. Now, the thing with macro reversals, like I said, it does not just reverse in a fortnight. It's going to happen over a course of time. Okay, in addition to that, we're going to see a shift in momentum. And that's why your minor timeframes, guys, those lower timeframes are going to be key. Okay, you want to see reversals on your lower timeframes getting into those higher timeframes. Now, a good starting point to really understand whether or not the lower timeframes are switching momentum here is get on over to the Mango dashboard. Okay, let's go ahead to the 4-hour time frame first. You can see that Bitcoin USDT, if I just hover over the trend, it was short before. Now it just turned neutral. This trend shifted 16 hours ago. And notice volatility, guys, still very, very low. So this is a one plus point. It's not a bullish point per se, but it's a plus point for the Bitcoin bulls for now, okay? So we're seeing this actually get triggered from short to neutral. How about the 12-hour? The 12-hour, however, is still bearish. It's still short. So I want you guys to keep your eyes on the dashboard for this confirmation indicators. Okay, so right now, 4 hours telling us, okay, we're seeing a shift in momentum here. Now, as far as the macro is concerned, I'm going to be playing mine primarily on the weekly time frame, keeping it as simple as possible where I require very, very little trade management. Okay, I'm not looking to catch the bottom, I'm not looking to catch the tops, I'm looking to catch the meat. So I'll say this, the chances of 13K Bitcoin is going to be very, very slim if price gets back up over 18.7K. Okay, we start getting back up over 18.7K. I'm saying 13K, the chances of 13K Bitcoin becomes very, very slim at that point. Because notice, the breakdown, getting into that FTX event came in at 18.7K. That was the breakdown point. So if price takes that back up again, I'm saying that the bulls might actually have the edge getting into that next range. Because once again, we would have then penetrated, Bitcoin would have then penetrated that next zone of price action from 18.7 all the way to 23.8K, which it was oscillating within before the FTX event. So I'll be looking for that once again. But that is going to be my contingency. If we get back up there, I'm going to be knocking off my bid at 13K Bitcoin. So now when can we expect that? Well, once again, as you can see, I got targets on my chart. As soon as price starts actually closing candles over 17.2K, I'm looking for weekly closes over 17.2K. I'm saying we're getting back up to 18.7. I'll be looking for weekly closes over 18.7 for me to knock off my 13K bid. Keep it simple, stupid. Okay, these are the key levels. I had drawn out the 15K region, the 15.8K region. I had posted it on the Mango Grove chat. So if you're not already in the Discord chat, come on in, join the Discord chat if you want more of these charts. Now, as we saw on the Mango dashboard, the 4-hour has flipped neutral. So let's quickly get on over to the 4-hour time frame. Like I said, your minor time frames are going to be important on market reversals. Make sure to keep your eyes on them at all times. So now this is the 4-hour time frame. Let me go ahead and switch on the Mango dynamic indicator very, very quickly. Okay, so as you can see, the dynamic has turned green and price is currently holding it as support. Look at that. Okay, so we have 1, 2, 3, 4 candles now holding the dynamic as support. I'm saying that this picture turns bearish if price actually breaks down below this region right here at around 16.6K, breaking cloud support underneath us. At that point, I'm saying there's a good chance that we come all the way back down to that 15.8K region, giving that region of support another graze. Okay, but for now, price looks actually pretty healthy on the 4-hour time frame. Let's also go ahead and put on our Ichimoku cloud here. Let's see what we have. And what do you know? Look at the cluster of support there. We have the Tenkin, 21 EMA, as well as 10 SMA. That is going to be the juncture, guys. So only if we lose this, I'm saying price comes down further. For now, this technically looks like it's putting in a symmetrical triangle of sorts. Okay, that's it right here. And yeah, look at that. Higher lows. Alrighty, so for now, this is, we're still sort of scrunched up in that zone. It's only when price takes out this high right here will I be expecting further upside for Bitcoin. Yeah, it's going to be a very, very interesting next week for price action, for Bitcoin's price action. But I say watch out for how these structures really play out on your lower time frames, because that is essentially what's going to give you the tip off on what level to expect next and whether or not 13K is even possible. Okay, we get back up over 18.7K. Like I said, I'm going to be knocking off my 13K bid. I'm going to be keeping it very simple. Now, I hope you guys enjoyed this video. I hope there was a takeaway from this. If there was, if you liked it, well, make sure to smash that like button. Like I said, it goes a long, long way. I will also be linking Sean's video on this end screen right here. That way you guys can go ahead and check out his analysis on the upcoming FOMC meeting. And yeah, with this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.